Time to answer a question that everyone is asking right now. Should I be investing more in the US economy, or should I be putting my money in Europe or all world? And it's a great question. It was asked this morning by Matthias, who gave me a super chat from Norway, saying, I'm currently 100% in the US stock market. I want to diversify and add something similar to VU, but in Europe. What is your take on, it keeps popping off the screen, VJK, or perhaps you have some other recommendations? So let's have a quick conversation about that. A lot of people are thinking this now, and we'll cover all these points about this big debate. Should we be buying all world, Europe, or should we be staying in America? The risk to reward. Well, we'll start with the risk to reward because right now you've got huge risk in the United States. We've got volatility with Elon Musk as well being alongside Donald Trump. Uncertainty, tariffs, the whole thing started from the United States. And I can give you a quick overview of how the S&P has performed over the last 3 months. It's down 3%. However, Europe, ETF, similar to the S&P 500, is up 15%. Flipping heck. What's going on? Should you be in Europe? Well, you've missed out certainly from being 3% down to 15% up. That's nearly a 19% swing. That's 2 times what you earn on the S&P in a year over the last 3 months. So there's definitely a question to answer here. Diversify. Key point. I say I'm diversified because I own the S&P 500, 500 of the best companies in the world, or at least 500 of the best companies in the United States. Are they now the best in the world? Well, we'll discuss that. Tesla has to be mentioned. Elon Musk standing side by side with Trump. A lot of people don't like Elon Musk at all. In fact, we've seen a terrible spate of attacks on Tesla cars. I think that's awful. If I went out tomorrow and bought a Tesla car and someone set fire to it, I'd be very upset. Obviously, I'm not in the government. Why are you setting fire to my car? Not very nice. But because of that, no one's buying Teslas in Canada. No one's buying Teslas in Germany, and it's spreading all over Europe now. You just cannot buy or sell a Tesla right now. Trump. Well, America has got Trump. Is that good? Bad? Well, it's certainly presenting volatility for the market. Europe doesn't have that issue. In fact, they're cutting rates again. The debt rates. Europe are already cutting rates. The Fed are still waiting. New markets. Well, if you invest in Europe or all world, you're open to new markets, new emerging markets that you may have never seen before that present new opportunity. So let's talk about it, shall we? If you would like to support this was a question by one of my members this morning that gave me a fantastic super chat from Norway, and I think it does qualify for a full explanation. So thank you, Matthias. Please tap the like button and consider subscribing to my channel. Well, I'm fully invested in the S&P 500. Why? Because it has a track proven record through all kinds of drama, through wars, First World War, Second World War, depressions, recessions, you name it, we've been there. We've had protests. What about the Vietnam War? We've had all kinds of different protests, people being angry about all kinds of things and upset with things, and yet it returns. Why does it return? Well, you may or may not like Trump. You may or may not like America right now. You may or may not like some of the principles and the ideas. However, when you invest, you're investing in the companies. You're not investing in the president. You're not investing in a flag. You're not investing in a country. You're investing in businesses, okay, within the index. So for me, I am very bullish on the stocks, the companies that exist inside the S&P 500. They're still performing well. In fact, most of the S&P 500 have on earnings reported 60% or plus reported good earnings. The companies aren't failing. All we've got is sentiment. Remember, the markets aren't the value of the company. They're just the prices that people are prepared to pay at the time for the stock. And that's because people are protesting. People are setting fire to Tesla cars. Does that mean Tesla cars are rubbish? No. People are taking their anger out on a car. I don't understand that. I've never understood violence. I can be upset and not like Elon Musk, but I wouldn't go out and set fire to my neighbor's car. I think that's just stupid people being stupid. And that will go away because stupid does what stupid does, and eventually stupid goes away. So right now, we've got extreme volatility in the United States. People are very, very unhappy with what's going on in the United States. So they're selling and they're moving into Europe. Now, because of that, money is flooding into Europe and all world, and those stocks are going up. However, the stock market isn't a 5-minute thing. It's a thing that happens over time, and people know the quality businesses, without a doubt. There are quality businesses all around the world, but there are amazing quality businesses in the United States. No question about it. It's not about Trump or Elon Musk or whether you want to set fire to someone's Tesla. It's about the businesses, and there's great businesses here in the United States. So at some point, people will take profit and come back. Sometimes sit back and reflect. So that's what we're going to do right now. And before I do, cheers everybody. Nice cup of tea. Or cup of coffee actually. So as investors, we should be, if we're traders, we're looking for quick flips in and out of markets. But 95% of day traders lose money. If you are a small retail investor, you can't really move the market. You can attempt to and try to, but reality is you can't. It's being manipulated and moved by institutions, governments who invest, and large investors. So you're always chasing the trend. So recently, we've seen money coming out of the US and go into Europe. So Europe is rallying. However, there's a thing that we say in England, because I'm from England clearly, even though I'm based here now in Texas. We say it in England, when America sneezes, Europe, England catch a cold. And that's a very, very true statement, and that's never been truer now. Right now, there's volatility in the United States, and people are turning away, and they're investing elsewhere. And that's not good. We're not going to say it's a good thing. However, for long-term investors, this presents opportunity. So I haven't sold my S&P. I haven't moved into the UK, even though I'm from Britain, and I'd love to buy a bit of Tesco or a bit of British Telecom or something like that, or Southwest Water, where I live in Cornwall. I've remained fully invested in the United States. Because I know that long term, that's where the strength is. Politicians come and go. People's anger comes and goes. If you buy All World or Europe right now on the stock that I just showed you, you're buying a trend. You're buying momentum, and that momentum has already occurred. It wouldn't surprise me at all that at some point in the very near future, people take their profits from Europe and buy back once again into the S&P 500 in the US, because they've made some very nice gains in Europe, and Europe is doing fine, but Europe has a lot of volatility and risk as well. It's not all great for Europe. But people are protesting. And my experience of people protesting is it always ends up going back to fundamentals eventually. We've seen it all through history. People get angry with somebody or something or a government, and then they end up coming back. How many people, when they get a new iPhone, say they hate the upgrade? Oh, I hate when they make changes. And yet they still buy an iPhone. Those of you that recently we saw a downturn in Coca-Cola. People were saying with Coca-Cola that they were going to turn away from Coca-Cola because of all the sugar and we want to be healthy. Well, that lasted for a while and people are buying Coca-Cola once again. Their sales are increasing again. We can all have these feelings and emotions and set fire to Teslas because we don't like Elon Musk. But ultimately, using that as an example, the Tesla is probably, arguably, still the best EV you can buy. At the end of the day, when all the noise settles down and Tesla's oversold, it's a great investment once again. People will realise, actually, it's a good car. And I want to own a good car. I don't want to be focused on the noise and protesting because it gets old and it gets very tiring to be a protester. So as a long-term investor, I see that the opportunity, and that's why I bought today on the Fed, the post-Fed dip, and it's already gone back up again. Because don't write off America too quick. We've seen this happen time and time again through recessions and depressions and everything else. When you invest, you might be investing in American company, but remember that American company sells its products and services all around the world. And even if people get fed up with Elon Musk or they get fed up with America, the institutions, and I'm talking now about network spending, enterprise spending, like Nvidia, for example, Amazon, Google, Apple, Meta, they are the biggest spenders with Nvidia. They're going to go where the best products are because there's no personal human sentiment involved in any of that. That is just what is the best product that's going to give me, my business, the best return and the best investment. Well, the answer is going to be in Nvidia. It's going to be in those American businesses. It's going to be in Apple. It's going to be in Meta. It's going to be in Microsoft. It's going to be in Google. These are all the companies that have seen the biggest sell-offs recently. And we talked about it at the beginning of our show today. And we talked about the AI premium has pretty much dissolved. You're now getting the Mag 7, excuse me, you're getting the Mag 7 now without the AI premium. That is the time to buy. And that's why I bought today. So to answer my member's question, when he asked me today, should I be buying Europe or all world? He gave a good example of a great ETF. Yes and no. If you are a trader and you were aware, as we all were, there would be volatility in the market because of Trump and tariffs, then yes, absolutely. If you bought that at the beginning as a trade, as a momentum trade, and now perhaps you've taken some profits and you come back to the United States, why not? But would you be doing it now? No. We heard yesterday that the Fed gave a very dovish report. The American economy is strong. The American businesses are strong. They're just overselling due to protest. So that time has come and gone. Those that stayed in the S&P and bought the dip are going to be the biggest gainers compared to those that sold out, took profit, have to come back. Because if you sold the American economy and bought the European economy, did you sell at the top? I bet you didn't. You sold on the way down. Well, we saw that because only over the last few weeks, Europe has been rallying. It wasn't rallying at the beginning. It's rallying now. So nobody bought, no one sold at the top. And then they've rallied and now they've got to sell again at the top. And most people won't sell at the top. When some start to sell and come back to the United States, then others will start to sell. So you won't sell at the top there either. And then you'll come back to the US, but the US would have already bottomed and started rallying again. So now you're going to lose on the way up. If you just stayed in and you bought the dip on the way down and didn't sell, one, you wouldn't have paid any tax, So you've got 20% savings straight away, and you're already in the market that everybody is now buying, and everybody wants to be in the market that everybody's now buying. So if you want to be fully diversified, it does make sense to be looking at Europe or the whole globe, the whole world as fully diversified, because if you are just in the United States, you're not fully diversified. Even if you own 500 companies in the S&P 500, but they are still the best businesses to own. So if you look at the long and short of this, if you catch the top, if you sold at the top, you bought at the bottom, and you rode it up in Europe, you took your profits and you came back at the right time, maybe you just might outperform those that stayed here. But the chances are you didn't sell at the top, you didn't buy at the bottom, you didn't sell at the top, and you definitely was unable to buy back at the bottom again in the US because it's already rallied again. If you put the whole thing together, you are probably better off staying where you were. If you really think that America's businesses are going to fail, America is going to go bankrupt, it's all over, it's finished, then fair enough. Take your money and buy Europe. Nothing wrong with that. Nothing wrong with Europe. I'm from England. I love England, and there's some great businesses. However, I recognize the power and the strength of what is here in the United States. So for me, as I did this morning, I bought the dip and I'm already up. We heard a good Fed report yesterday. And remember, whether you like it or not, whether you like America or not, the phrase America sneezes, the world gets a cold is as true today as it's ever been. America does have the strength in its businesses and its economy, and I don't see that going anywhere anytime soon. Yes, there will be volatility, and yes, there will be protests and people unhappy with what's going on right now, but ultimately, in my opinion, and it's what I've done with my real money, I've stayed exactly where I am. In fact, I bought on the dip. And I think I'll outperform anybody that goes to the Europe and then comes back. I hope this is an answer to your question. Matthias, you gave me a super chat from Norway. You didn't ask for a full review, but this was my opinion and my thoughts on what I've done with my real money. I would love if you or anyone else would comment to this video. I'm making it live. Later on, it will come out as a video. Please reply to me in the comments. Do you agree? Do you think I'm right to stay in the US economy? Are you still in the US economy? Did you sell at the top? Buy the bottom? Are you about to sell at the top and buy back? Well, you won't be able to buy the bottom of the S&P, that's for sure, because when everyone sells in Europe and starts buying back, it will go up. Anyway, there's my thoughts. What do you think of that? Let's go back now to the main part of the studio. So there was my thoughts today. That was my full explanation on the US economy versus Europe or world. Do you agree? Do you not? Look at my portfolio right now. Look at this. I bought the dip this morning so I need to turn the studio green. Look at that. There it is, right there. If I go back now down to my main account, look at that. I'm up today, 0.5%. 109. Yes, I just bought some more on the dip. 23 trades, 23 wins. If I was a trader, I would have just chalked up 24 trades, 24 wins. But I'm not selling it. I'm holding it. And I'm extremely happy to see that at the moment I made the video. It couldn't have gone better. The premium for AI is over. This is a time to buy. It was an opportunity today to buy the post-Fed report, and I did, and I'll show you what I did just so you can see for real. This is Vu. How do you do? I'm very well, thank you, Mr. Vu. Don't know why I'm having a conversation with my computer. There you go. 9 shares this morning. 9 shares at 5.18, even though it was more than my 5.12, my 5.11, my 5.14. I wanted to add considerably more because other than those few shares there, I bought near the bottom. the majority were bought on the way to the bottom at 520, 525, 530, 540. So you're damn right I wanted to buy some more at 518, even though it was up from where it was just yesterday. That is the very definition of being an investor. And now, if you look at my week, if I go over to my week, I'll be at an all-time, I'll be at another high. There you go. 5.5 grand in a week. I bought more, and in a couple of days' time, ex-dividend date will come up, and 185 a share for the S&P as well. I'm very, very, very happy with my decision. Remain in a strong market. Long term, buy the dips. 99 times out of 100, you're going to win and beat the traders. There you go. There's my thoughts. Do you agree? Leave me your comments below. Click above my head for all the links down below the description. Matthias, this was for you. Thank you so much indeed for your super chat. I hope I answered your question. Nothing wrong with your ETF, but I am staying exactly where I started. Over here and over here, I'll put more videos I think you'll find useful. Until next time, as always, take care of yourselves and each other.